Hello, everyone. Thank you so much. Hello, everyone. Thank you so much for joining in. Welcome to India Factoring Chat Show. Factoring, one-stop solution for your global aspirations. I'm Vinod Vasan, head Tamil Nadu, India Factoring. I'm the host for the day. We have two eminent speakers today. And before that, let me take you through India Factoring first. India Factoring offers working capital solutions through the factoring product aimed at converting your receivables into cash. The company is a subsidiary of a European bank, FimBank PLC Malta, and is registered with the RBI as an NBFC factor. India Factoring is also 83 category authorized dealer. Through our global network, we offer one-stop solutions around receivable finance. Today, we have two amazing speakers on the show who will talk to us about overall factoring ecosystem in India and solves all our queries pertaining financial aspect of your business. Please stay tuned. Also put your questions in the comment box. We will take it up to the speakers at the end of the show. Let us welcome our first speaker, Mr. Tushar Buch, Senior Vice President, M1 Exchange, promoted by Mind Solutions Private Limited. Mr. Tushar took up this assignment after working in various capacities for 38 years, the last being the General Manager at the Office of Deputy Managing Director, State Bank of India. Prior to this brief assignment at SBI, he had 7 years stint at SBI Global Factors as MD and CEO. Also, he had chaired Factoring Associations of India and FCI, a global association of factors, as a board of directors. Welcome to the show, Mr. Tushar. We are looking forward to have an insightful discussion with you today.
Thank you, Vinod, for this warm welcome and very kind introduction.
Thank you, sir. Let me invite our second speaker for today, Mr. Puneet Singh Bhutani, Regional Head and Executive Vice President, India Factoring. Mr. Puneet is a seasoned banker with a demonstrated history of success in the financial services industry. He has over 20 years of rich and insightful experience in banking with an expertise in corporate and retail banking business. He is also an expert in trade finance, international factoring, and corporate finance. Prior to joining India Factoring, he has worked with S Bank as a Senior Vice President and was managing Central and South Delhi territories. He has also worked with HDFC Bank and managed branches across Delhi, Punjab, and Haryana. Welcome to the talk show, Mr. Puneet.
Good afternoon, Tushar. Good afternoon, Vinod. Thanks for having me.
Thank you.
Good afternoon, Puneet.
Thanks. Good afternoon, everyone. So let us, take the first question to our chief guest, Mr. Tushar. Mr. Tushar, developed market provide receivable finance solution in a wide variety of products from the banks and financial institutions. However, in India still receivable financing through unsecured lending is still a challenge for MSMEs to get from the bank. So this has been completely changed by M1 Exchange in the last 5 years by serving MSMEs, providing unsecured finance arrangement. So please explain us how M1 Exchange support MSMEs in India in the last 5 years, and what is the plan forward?
Thank you, Vinod, for that one. And I would like to first begin by putting things in perspective. That as far as products for receivable finance and banking is concerned, I think the number of products in India are more than probably anywhere in the world. The difference being that the ubiquitous cash credit system, the credit available on tap in India was so widely prevalent that the other products that were going around, did not share the limelight. And in fact, bill finance, if I can take you through mythology or the history also, there is that famous song by the saint Narsimha Mehta, who wrote a hundi to Lord Krishna. So the bill finance in India goes as long back as that. However, the whole problem, the whole approach to receivables finance and receivables management was, banking on technology. So technology was the most important ingredient, where probably India was slightly late in catching on. But now things are quite different, and it's always uh, in the various technology leveraged products, the most acceptable and prevalent one, if I can say, and the affordable one, if I can dare make that statement, it is the trade system that has been created by the Reserve Bank of India. And just a little bit of history before we go into the M1 exchange or what the scene is right now. That when Mr. Raghuram Rajan was the governor of Reserve Bank of India, in his famous 100 baby steps speech, he said one of the baby steps for making the financial system in India more responsive to the customer need, he had highlighted was that the MSME providers of services and goods should be able to float their invoices on an exchange, and they should get ready, liquidity. This was a vision statement, a very bold vision statement. However, it took a good another 5 or 6 years, before which in 2016, the Reserve Bank of India floated a paper inviting some prescribed parties which had fulfilled prescribed conditions to come and make an offer to form this platform, and that is where M1 Exchange entered the scene. M1 Exchange has 2000 was formed in 2002. The parent organization, Mind Integrated Solutions, which were service as a software concept. We were there, and so there was a lot of account receivable, account payable experience that was brought in M1 Exchange. So I think I will stop here and wait for the more. Or would you like me to elaborate further on this? Anything that I left out, Vinod?
Yeah, you can elaborate, sir. You can elaborate in detail. No?
Okay. So when M1 Exchange came on the scene, and when we were making the product note and all that, I was lucky that, as the MD of SBI Global Factors, and of course, Punit's counterpart, India Factoring, we were the only two, and Canbank Factors, not forgetting them, we were the only three vibrant factoring companies in India. So we were immediately the go-to people to consult on how to put out this trades platform, which was based essentially on the law of factoring. So that gave us, a chance for the early product note drafting and all that. And one thing, when the product we took to the customers, the first reaction was unsecured lending. No way, we are not going to sign up. It became gradually, by talking, and the first support came in form of 3 or 4 early banks and factoring companies. And gradually, when we touched the first 1 crore transaction, per month, we were so happy that we did 1 crore. And now today we are doing 1400 crores, 1500 crores per month. That is the difference, and that is the journey. But it was not easy. Then we had to do a lot of convincing that why factoring, although unsecured, is going to be much more safe than any other product. We'll go into that slightly later in the talk. But this is how, the early days, and that is how we built up the portfolio. So the difference between factoring and the other products was that, by 2016, when we were putting up the trades platform, we had a legislative framework supporting the product in form of Factoring Regulation Act 2011, which was notified on 1st April 2012. So we had that act and the assignment and the law governing that very firmly in place. Plus, again, I'm saying that it was the technology that resulted in success of this product. So the technological backbone for settlement of funds between the vendor, the anchor corporate, and the financier was provided by the NPCI. So these two combinations, there was a legal framework, there was some technology partner in form of the 3 trades platform, and then there was the NPCI gateway. So this 3, the magic started working, and gradually, that people started tasting the fruits of this, technology, and there was no time better than when the first lockdown was came upon this nation and whole globe in from April 2020. That the real utility of this product came. The MSMEs, whose banking and other things were, disrupted, were onboarded digitally by the platforms and the transactions began. So from July 2020 onwards, there was no looking back. And at the time the market needed the most, the trades platform were there, helping out the MSMEs from their liquidity and trade liquidity problems. So this is, how I would like to, put the evolution of the product trades.
Thank you. Thank you, Mr. Tushar, for explaining us in detail how Trust Platform operate. And as you clearly mentioned, technology is the main prime factor now in lending, and M1 Exchange is used it in a better way. And I would like to share you one of my personal experience as well in this correction. So you also touched upon the pandemic, how the MSMEs manage. In fact, met one MSME supplier during the pandemic time in 2020 in a small town in South Tamil Nadu. So during that time, he was keep working on in his mobile. So I was very curious to know what he's doing it in mobile. So I just asked him. He's my well-known person. So he said one of his buyer tied up with M1 Exchange, and he shared some link, and he's registering for discounting his invoices. He's a very small MSME supplier, based out of a small town, but the reach of technology and the M1 Exchange, it is completely changed. So I was very surprised. So as you clearly mentioned, technology play a major role, and ease of doing business also M1 Exchange introduced to the level of greater spread. Thank you. Thank you, Mr. Tushar.
Yes, Vinod, and I can only supplement what you said that, out of the 9,500 MSME vendors that we have got on a M1 Exchange, and probably 3 times that in the entire 3 trades platform system, 70% or 80% are in tier 2, tier 3, tier 4 cities. And that is the digital reach. That is the revolution that was ushered by this product. Yeah.
That is really great news. Great. Yeah. Thank you. Let me move on to our second speaker, Mr. Puneet. Mr. Puneet, India is moving towards an export-led economy growth, and especially the merchandise export is touched 300 billion USD in 2021 December, which is 27% increase compared to last year. So Indian export industry also fully geared up to capitalize this momentum. All the exporters, manufacturers are gearing up to increasing their sales turnover. So in this scenario, we understand factoring is plays a major role, because cash flow is a prime requirement when you grow the business in an aggressive way. So please tell us how India factoring helps the exporters to capitalize this momentum.
Sure. Thanks, Vinod. In fact, we have been very positive on Indian exports from last 2 years, because we were getting a constant feedback from most of our clients that the number of inquiries which are coming to them are far higher, and they were getting more order from existing customers itself. So we were having a clear picture that buyers across the globe are looking for something other than China. So now that is, I think, falling into the right picture. Volumes are one of the highest, and it is not only fixed to any particular segment. So we are seeing growth in all our segments, different segments we have. And we are India factoring, we being the leader in Indian market from last 4 years, I think we have the right set of products for the exporter. So our key offering in Indian market is a non-recourse export factoring, which is based on your future projections. We don't lend like a bank lends based on your last year balance sheet. We lend on the buyer. So if the buyer is credit worthiness and you have orders in hand, you have purchase orders, all the customer prospect can come to us and they can have those working capital facilities. They can focus on their main core job, which is the product, and then everything else, funding, collection, everything can be handled by India factoring.
Thank you, Mr. Puneet. Very said. It is indeed exporters can focus more on their core business activities instead of chasing with export for the buyers for the collection. Since factoring in India factoring supports completely on the finance arrangement, also taking up covering the risk of buyer and the collection effort as well. Thank you. Yeah. Mr. Tushar, I wanted to another an interesting question we have. You are involved in a trust platform of onboarding anchor buyer, for arranging facility for their vendors. So India is a growing market for factoring. So we'd like to understand what is the understanding level of buyer to accept this arrangement, and this is a major thing. That is how the factoring grows. So how do you see the buyers' acceptance, and or they have a good understanding and awareness of factoring? Please explain us.
Thank you, Vinod. In fact, Puneet, I and our colleagues in CanBank Factors and IFC Factors, we were having a common problem that while the Factoring Act Regulation Act came and said, okay, there is an assignment which doesn't attract stamp duty, but that assignment was enforceable only if the notice of assignment was served on the anchor corporate. And this is where the maximum resistance we are facing. We faced this resistance till maybe even 2017 or 18. But one thing that happened was, the trades changed it all completely. It was a paradigm shift. What happened was that I was narrating, how difficult it was to make the trades as an acceptable product. A great support and enabler came from the government of India in 2018 November, when by a gazette notification, they said that every corporate, every entity registered under the Companies Act, if it has a throughput, it has a top line of 500 crores or more annually, then they are mandatorily required to register with the trades for paying out their MSME vendors. So no matter who the corporate was, the borders, started gradually falling, and the acceptability of assignment, started increasing. So this brought about a big change, and the impact of this is that even in the traditional bilateral factoring that we probably do at SBI Global and India Factoring and others, even there, I suspect that the acceptability of this assignment in domestic territory has become, slightly increased. Puneet, would you bear me out? Is my hypothesis correct? How would you react to that?
Yeah, I think this has totally changed the market dynamics itself. Earlier, there were a lot of resistance. Now people are very forthcoming.
Yeah.
Correct.
And of
Yeah,
course,
absolutely true,
what
sir.
you did, the magic in the export factoring side is something, it's a different, it's a game par excellence. It's a totally different thing that what you did, And in fact, I was reading a report from the International Chamber of Commerce that the merchandise exports are about 20% below the 2019 level already. So it will need, according to their estimates, a capital of about $5 trillion to bring it up. Now, where will this capital come? Capital is not going to be produced. It's going to be through these innovative supply chain finance and factoring that, the trade liquidity bridge is going to be built. The gap is going to be bridged. So I
Agree.
think these are all, we are going through very tough times, but then we have got the technology and the products and the mindset to embrace all this. So
I would say interesting times.
yes, Puneet, of course. Couldn't agree with you more.
Correct. Yeah, well said, sir. So now awareness has improved. We are seeing lots of buyers are coming forward for the supporting factoring arrangement, and this is really a good news. I know many MSMEs getting support, because of this arrangement. Also, government of India as well supporting this kind of arrangement. So going forward, similar like other Western countries, we also India also expecting more factoring for their MSMEs to grow, and this is a real growth we can see in the coming years. Yeah. So let us move to Mr. Puneet for another interesting question. So, Mr. Puneet, exporters shares their, especially on export factoring, they share the buyer details, all various confidential details to factoring company. So we have seen in the past, there are various new factoring companies coming up in the market, which are mostly fintech companies, which are not as much as regulated like banks or non-banking financial institutions factoring companies. So how do you see sharing how the exporters need to select the factoring company? How do they select the regulated companies? So what are the things involved to share their confidential detail to a factoring company? Please explain us.
Yeah, thanks for that question, Vinod. I think that would help a lot of universe of exporters. See, unlike fintechs or other factoring companies which are based out of India, they don't have licenses to operate in India, so there is hardly any regulation on them. So that is the key difference one that exporters should look for. Say, for example, India factoring, we are registered in India with RBI as a NBFC factor, and we are also authorized dealer who can handle your all post shipment queries like any other bank. So yeah, customers can be rest assured that if they are working with India factoring, at most all the rules of the law land are followed here, and they should not worry on any of the data secrecy point of view. People have to be careful working with fintechs. Yeah.
True, absolutely. So,
Yeah, I
it is
couldn't agree
indeed.
with you more. Punit, well, no, with no disrespect or disregard to anybody, because even so many fintechs have brought in a lot of change. But working with a regulated body is always a comfort in lots of ways. And yeah, I couldn't agree with you more.
Yeah, thanks, Puneet, for explaining us that India factoring is a well-regulated company and how important it is for exporters to deal with a regulated factoring company. And now the exporters can confidently share more detailed, confidential trade details to factoring company which is only regulated. So thanks for the valuable information. So now we have a question from our audience, Gauri Das. What will be the impact of amended factoring regulation bill on overall markets? Will it be helpful for businesses? Mr. Tushar, would you like to take it?
Yeah, of course, I can take that, certainly.
Yeah.
Uh, okay, what did this factoring regulation amendment bill do? It has, done three things. First of all, the market was facing a liquidity crunch. There were not enough players coming out in this factoring field, and on the trades platform, while NBFC factors were allowed to participate, the other NBFCs represented that we are also strong enough, we are also mature enough, we also have this corporate lending experience. So why should we not be part of this? So that was factored in, and the NBFCs were permitted on the trades and in the factoring scene. However, the amendment bill said that while we are providing this legislative framework, we will leave it to the regulators to frame the rules for which kind of NBFC to be allowed, whether everybody to be allowed, because there are 9,000 NBFCs in India. So can all 9,000 participate? So they left this to the Reserve Bank of India. And I'm happy to share that on 14 January, was it 14 January? No, sorry, I'm sorry, it was August 2020. No, I'm mistaking the date somewhere. I think it was 14 January. Anyway, the Reserve Bank of India came out with the rules that which kind of NBFCs could participate and how they could participate. So the main three criterions Reserve Bank of India specified is that A, the NBFC should not be a deposit taking one. B, its asset side should be at least 1,000 crores. And C, they should apply for a certificate of registration. And based on the fit and proper criterion, the Reserve Bank of India will issue these certificates. So there is a step, made in that. So this was the first change that the factoring regulation amendment bill did. The second change it did was that in the trades platform, as I was mentioning, in the very early days, there were hardly, 20, 30, 100, 200 invoices from all the financiers put together, in a month. So it was possible to register the charge with CERSAI. Okay, why the charge with CERSAI? I should first explain that. The Factoring Regulation Act grants a lender, a financier, protection if there is a valid deed of assignment by the vendor, the notice thereof is served on the anchor, and this assignment charge is registered with the central registry, the acronym of which is CERSAI. It is under the Securities and Rehabilitation Reconstruction of Assets Act, SURFACE Act. It has been put up this SURFACE. So you have to register the charge. So there was a lot of manual kind of a registration process, and each invoice had to be registered and keyed in separately. Now, as the business grew, the volumes were so large that you can imagine. I was saying that it was 1 crore a month, and now it is, from all the three trades platform put together, it is at least 5,000 crores a month. So, and the number of invoices we have would be more than, by till date in the last 4 years, we would have done more than 10 lakh invoices. So to register all this manually was becoming a challenge. So the Factoring Regulation Amendment Act said that now, look, anyway, the trades platform is being run by fintechs, technologically superior entities as compared to individual lenders. So why not they register the charge with SARSA on behalf of all the lenders? So this was the second provision in the amendment. And the notification of that, implementation has come again on 14 January. There'll be some time before, this is put into action, because the technology has to be made more robust than what it is. And SARSA and the trades platforms are already working out a technology solution. So anyway, coming to the point, this was the second amendment. And the third amendment was that the rules and the necessary, because this is an evolving product, so the government realized, the Department of Financial Services realized that there could be many more, innovations required going down the road. So they have given this legislative power under the Factoring Regulation Amendment Act to the Reserve Bank of India to, to regulate this trade better and, come out with enablers as and when the fintechs and the technology and everything evolves and goes further. So this, I think, was the Factoring Regulation Amendment Act. Have I answered that question adequately, or there is something more required?
No, I'll add something. So I think this was most of the things were a need of the industry, which the government has acceded to. And I think because we all understand the finance gap is so huge and more competition, I think it's always good for the industry. So I think overall very positive step from the government.
Yeah, of course.
Thank you.
Of course,
Thanks.
this is the need. This was the cry of the industry. Yeah, and thank you, Gauri.
Thank you, Tushar. It was very well explained. Thank you, Puneet, for explaining further. So we hope this Factoring Regulation Act will bring more factoring companies into business in India. So it will help more MSMEs going forward. So let us move on to Mr. Puneet for our next question. We have just now discussed about the importance of dealing with regulated factoring company. We would like to understand further. There are factoring companies with AD category and without AD category factoring companies. So recently we see, many exporters prefers to deal with authorized dealer category factoring companies. Please tell us why it is important to deal with AD category factoring company. What is the implications, Mr. Puneet?
So, thank you, Vinod. See, when the factoring company is AD, then you need not involve your existing bank for the leg of the transaction, which is post shipment. However, when the factoring is not an AD, the bank would consider that as a third party. When you are an AD, then all the regulatory aspect of the transaction post shipment, like handling of a shipping bill on a EDPMS, issuance of BRC, how the transaction has to be closed, can be handled by the factoring company itself. So there is no confusion, there is ample clarity. Payments are directly coming to the AD itself. So the transaction is very clear, regulatory aspect is very clear, because we all know that currently, because due to COVID, the regulator is not going very strong on pending shipping bill which are outstanding. But prior to the COVID level, there were very strict guidance from RBI on closure of shipping bills. So this helps exporter a lot rather than involving a third party which is not an AD.
Yeah, very well explained, Puneet. So, as you mentioned, this is very important to deal with authorized dealer factoring company, because factoring is not only just a finance. The factoring company need to compile all the RBA related compliance activities as well. And we have seen, I would like to share another, point in here. So I have seen in my experience, there are some bankers who are not, objected to regularize the invoices, to issue EBRCs, which are received by another factoring company, because payment received in one side and they are doing regularization part. So when an exporter deal with the AD category factoring company, that hassle will not be there. The completely end-to-end service will be provided to them. That's true. Yeah. So now we have one interesting question from our viewers. Vinod Chaubey. Yes, I have a question to Mr. Tushar. With GOI allowing set up international trade finance services platform at GIFT IFSC, how is that going to help Indian exporters, especially the factoring business? Mr. Tushar.
Thank you, Vinod Chobe, for this question. This is a very, very interesting and a recent development. The announcements came only, I think, in August 2021. We all have heard of free trade zones, encouraging industries and to produce goods only for exports or only for external markets, which are not subject to the duty and tariff regulations applied to domestic trade. This was with a view to make them competitive. However, the trade finance, even from the SEZs, they were dependent on banks in India. So while they were given concession in terms of the tariffs, there was still a competitive rate of finance which was missing. Number two, there was the Indian exporters being far and widespread across the country, there was no global kind of a support to them to bring their products into the world market. They were either dependent on anchors who are very large corporates, and you sell it to them, and they do the exports. But exporter from on his own right, like you would see any number of pockets in India, like Coimbatore for textiles, Jamnagar for brass parts, Ludhiana for sports goods and otherwhere. So there are so many pockets in India where so much of work is being done, so much goods and services are being produced, but they don't find a voice in the external market. And this is where the government of India, which is very, very progressive in its thinking, came out of this a unique concept to create an international financial center, and within that international financial center, to house an international trade finance platform quite akin to the trades which is being in the domestic industry. This is just an announcement, but there is no equal in the world. So there is a lot of learning curve, hard work, and technology and innovations to be involved. And most of it, the success of Trades was that today we have got an ecosystem of maybe altogether 20,000 MSME vendors and 1,500 anchor corporates and about 50 banks operating. So this participant interest in this platform, a lot of road shows will have to be hosted to get this interest and get the transactions going. But first things first, that yes, a decision has been taken. 4 parties, including M1 Exchange, are working hard on putting up this platform. By April, there'll be the transactions done in the regulator's sandbox. That is the trial transactions under the regulator's watchful eye. And then the performance will be evaluated, and by about September or so in 2022, the license will be issued, and this will go full-fledged. But believe me, this project of this kind exists nowhere else in the world. It is so path-breaking, it is so innovative. Now the features, if I say right now what exists in that, I think that just like in the trades platform in the domestic market, we have got competing bids for every invoice from the participating banks. Similarly, on these international platforms, banks across the globe will be able to compete and bid for the invoice. So obviously, for the Indian exporter, the competition, the competitive rates will do them only good because more participants will come on board. But it is not only the Indian exporters who are going to benefit; the Indian importers also. Right now, lots of imports because, as we all know, India is a net importing country, and lots of imports take place backed on documentary credits. Now, opening an LC is not easy. It has a lot of administrative costs. The By operating on this platform, we'll operate on an open account payable system, and so that's why these LC and these administrative costs are. I expect that they would reduce. So this is a very welcome development, and let's see how it progresses. We are taking the baby steps. We are treading very cautiously because we want to build this into a world-class institution and a product. So thank you, Vinod Chube, for asking me this.
Thank you. Very well covered, Mr. Tushar. So it is a recent development, and very clearly you explained in detail. Hope it answered to Vinod Chaubey. So let us move on to another viewer's question. What is different in assignment of receivables and factoring from Jayan?
Punit, would you like to take that?
Yeah,
Yes,
yeah. So assignment of receivable would be a part of factoring. There is no comparison between assignment and factoring. So once, in this case, the invoice, there is an assignment clause which is mentioned, and once that assignment is enforced, factoring we can fund the transaction. So once the assignment is done, the factor becomes the owner of that debt. They will collect that debt from the buyer. So totally, it is part of factoring, not a difference.
Thank you. Hope it is answered to Jayan's question. So the factor become owner of the receivables once it is assigned. So another question from Mr. Deepak Jain. How do factoring differ from threats? So Tushar would like
I
to
think
take
Tushar,
this.
you can take that.
Yeah, I can take it. And in fact, Punit and I both will supplement each other, but I can begin. Thank you, Deepak, for this question. Essentially, both factoring companies and the trades rely on the same legislative framework, that is the Factoring Regulation Act. That a vendor of a good makes an assignment in favor of the financier or of the factor. The notice of assignment is served on the anchor, and on the due date, the anchor completes his obligation under the contract only and by only paying the factor and nobody else. This is fundamental, whether it is bilateral or whether it is trades, it's the same. The differences come out in the operation and how the scheme operates and in the technology that has come in. Let me just put it very as simply as I can. Supposing, like Punit was mentioning the exports, an exporter from Ludhiana wants to get a factoring for his goods. So what he will do, he'll approach Punit's team and he says, okay, I want a factoring limit. So Punit will study the sales, his sales ledger, his trends to whom he's selling. He will verify it from his important counterparties whether this is coming or no. He'll try to do the due diligence, and in this process, the number of steps involved to arrive at whether the goods factored to be or for which the limit is sought, the assessment. It's a slightly long process, long-winded, but Punit has no choice because he is going to give you the limit for the entire sales ledger. All the complete sales to going to any buyer is going to factor. The entire sales book is going to factor and not individual invoices. And here is where the trades becomes difference. The key difference that in trades, it's a transaction-based approach. Every invoice is different. But then how do trades ensure that there is end use of credit and there is proper finance? Well, it's a different pitch altogether. It's based on technology, on bed of a lot of due diligence and technological support. I will not elaborate on that right now at this juncture. Maybe going forward, I will come to it. But this essentially is the difference. And The other difference, of course, was the settlement system, whereas the TREDs have the support of the NPCI settlement system. The factoring companies find it difficult to go there and get the same thing done. So they rely on the traditional banking, for settlement of funds. Puneet, am I correct in that last statement?
Yeah, yeah. We as a factoring company, we don't have any tie with NPCI as of today, and we don't see that going forward also. So it's better to come on a platform and use that strength.
Yeah, yeah,
Thank you. Thanks,
uh,
Mr. Tushar
yeah.
and Mr. Puneet. Yeah, we have another question from audience, Mr. Kaushik Saha. In continuation to the question of Mr. Vinod, I would like to ask Mr. Tushar, in threats, there is settlement partner like NPCI. How in case of ITFS that can be ensured? What are the challenges you foresee? Mr. Tushar, over to you.
Uh, Kaushik, thanks for this question. Let me tell you very, very honest, what are the sentiments going on within these four parties who are preparing for this ITFS. We are brimming with confidence and we are approaching it with all the positivity. Uh, it was, if I may just use an analogy of the yesteryears, when the great actor Devanand was asked after his successful film Des Pardes. Some journalist asked him, Devanand Saab, what do you think about Des Pardes? He says, that is over. Let's talk about Anand and Anand, the new movie. So we are not so much worried about what are the limitations and what are the challenges. Right now, we are looking to bring the product to the market. And yes, there is no settlement like NPCI, but I'm sure we are, of course, working on something. The government of India is also backing us with something. And over the years, something is expected to involve maybe something like a dollar clearinghouse or something. We will work out something. But yes, it's a challenge at the moment. But for right now, we want to bring a state of art platform for the benefit mainly of the MSME Indian exporters. So we are very focused and we shall get on with that. Thank you for the question.
Thank you for the explanation, Mr. Tushar. And we have another question regarding export finance related thing to Mr. Puneet. And we have very well covered about MSME suppliers, how they get benefit out of the factoring. Now the question is, of late, we have been seeing many mid and large corporate companies also willing to go for the export factoring arrangement. And there are various factoring companies, but still the limitation of the limit what they offer is always very tiny limits. So now when the mid and large corporate get involved in factoring, they always look for the large limit size. So we'd like to understand from Puneet how India factoring strategizing this and how big limits they can take up.
See, this change I would say is from maybe last 2.5 years. So what has happened is during the pandemic, when the pandemic first wave came, there were lot many bankruptcies which were filed, especially in US. So large corporates early, because there is no dearth of funds for large corporates. But what they have realized is they have to look this product into a different aspect altogether. Because once those bankruptcies were filed, there were huge bad debts which were created in those large corporate books. So when a large corporate or a mid corporate comes to India factoring, we don't have any constraint on the lines which we are funding. Right now, maybe starting from a $500,000, we have lines till maybe $20-25 million which are running live. From a top line of maybe say for example 25 crore, we have companies as large as 6,000, 7,000 crore. So benefit for a large corporate is majorly de-risking of their balance sheet. There are large debtors which are outstanding on the balance sheet of large corporates, so they can totally deleverage those debtors, and those debtors can be passed on to India factoring, and those debtors get converted into cash. So right now we are seeing large boom in terms of exports. So those large corporates need to have more capacities, so they can use that excess cash to create those capacities. Because we all know this is a long story. Exports will keep on happening. It will be a huge jump in export year on year, because it's just starting right now. So lot of even if say for example 10% of what China delivers to US or Europe comes to India, that is a huge chunk. For that to happen, large capacities have to be created so that financial gap a factor can chip in. You can convert your debtors, then whole collection issues, time zone issues, different languages issues. So factoring altogether is a bunch. It's a total preposition for those corporates. So now we can clearly see corporates approaching us for all those solutions. So I think good times for Indian exports, good times for companies like us.
Yeah, I'm sure,
Thank you.
Puneet.
Thanks.
And yeah, all the best. Yeah, that was a very good perspective you get here.
Yeah, thank you very much, Mr. Puneet. And we have another viewer question from Mr. Mike. How is supply chain finance different from traditional factoring? Mr. Puneet, would you like to take?
Yeah, sure. So right now, supply chain finance, I think it's a part of, it is not a difference. Again, it is a subset, I would say. Supply chain finance would cover a purchase factoring and a sales factoring. Traditional factoring is happening, but right now, we all know that technology is the key. Technology leads to reduction of time, reduction of cost. So from traditional factoring, we are moving to platform like Trade, like Mind Solution. So this is only the way forward. So right now there is nothing like traditional factoring. All rules, everything is online right now, and I think the due laws, due diligence, it's more of an IT thing. It's more secure, both in terms of seller and buyer connection. Getting them connected on the platform is far more easier. Serving of those notices has gone. So I think technology is helping a lot.
Yeah, that's very well said, Mr. Puneet. Now we have another question from viewer, Mr. Deepak Jain. Has non-recourse factoring started in India?
So I'll take that. Deepak, non-recourse factoring has been started long ago, but I think because we all understand that factoring is not as yet popular. From if questions like this come up, is not yet popular. So for exports, non-recourse factoring is the we as India factoring started way down in 2016. So it has been non-recourse since then for us. What change is happening in last maybe 6 months is now the regulator has come up with guidelines where financial institutions like us can take those credit insurance policies, and we can come up with solution where a domestic factoring can also become non-recourse. So that is future. We see those products coming maybe in a quarter. So export factoring, yes, non-recourse is available from last 6 years, and domestic, yeah, we see those products coming in maybe 3 months time.
Can I supplement to what Puneet has said?
Yes, please.
Basically, non-recourse means without recourse to the vendor, without recourse to the seller. Okay. As Puneet said, this product has been in India in terms of, and in export factoring, it is the model on which the factoring companies operate. The trades operate even in the domestic scene on a without recourse basis, and that's the beauty of trades. The MSME vendor, he uploads his invoice, and once accepted by the corporate, there is no recourse whatsoever on the vendor. However, this without recourse should be understood in its clear sense. That when we say without recourse, it is if the goods shipped are there is no commercial dispute. In the sense, if there is some outright, if you say I'm shipping 100 tons and you ship only 10 tons, then it can become a commercial dispute, and then the recourse in that case can still come to the seller, because there is no, without recourse is a very in that proper sense it should be understood. So it has been there in India, it has been there in export factoring, and now trades have brought this without recourse concept to the domestic market also.
Yeah, that is great news, Mr. Tushar. So domestic market, you are already doing receivables, domestic receivables in non-recourse basis, and India factoring doing export business under non-recourse. So all customers, domestic and exports, will get benefit out of it. Yeah, now we are running out of time, and we can take our last question from Mr. Deepesh Shalvi. Hi, what benefits will be available for existing factoring NBFC to have registered office under GIFT City? Any one of you would like to take?
Okay, I can attempt answering this. First of all, if you register under Gift City for the limited purpose of ITFS, you can participate only if you are registered in the Gift City. So yes, that will be the direct benefit, that an opportunity to participate on an international forum. So that is the immediate benefit. Plus, of course, I guess there will be some tax concessions and everything associated with, to encourage people to come and invest in the Gift City. So all these things will follow. Dipesh, I mean, this is all that I had
I think
for
I
you,
can add.
on this
I think I
question.
can add one more point.
Yeah, yeah.
I think factoring companies would be able to pass on some benefit if there is access to cheaper funds in Gift City. I think that can be one of the benefits.
Yeah, sure.
Thank you, Mr. Puneet. Thank you, Mr. Tushar, for the answer. So we are, almost on time, and we are getting various viewers' questions. We will be replying to them separately. So let us, thank our speakers now. Thank you, Mr. Tushar, for joining us for the show. It was a great and insightful discussion with you, and hope all our viewers got, a knowledge about factoring and what are the new development in factoring industries are coming up. Thank you so much for joining in, Mr. Tushar.
And thank you, Vinod and India Factoring, for inviting me. Thank you very much, Puneet.
Thanks a lot. Yeah. Thank you, Mr. Puneet, for joining in and sharing your thoughts on export factoring and how non-recourse is helpful for mid and large and MSMEs altogether, and also how the buyers are secured under factoring. It was very helpful, information to all the exporters. Thank you so much for joining in.
Always a
Thanks,
pleasure.
Puneet.
Thank you. Bye bye.
Bye-bye. Thank you. Thank you all. Hope you all, all your questions are answered. Some of you questions maybe we missed, and we will revert back to you in LinkedIn. And if you want to know more about the factoring, you can reach out to our LinkedIn page or a YouTube channel, or alternatively, you can directly call our branches number, which is very much available on our website www.indiafactoring.co.in. Thank you very much. And I'm signing off. We'll be back with another interesting talk show shortly. Until then, signing off from you all. Vinod Vasan. Thanks.